Ladies and gentlemen, good day and welcome to the CreditAccess Grameen Limited Q4FY20 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference is being recorded. I now like to hand the conference over to Mr. Renish Bhuba of ICICI Securities. Thank you, and over to you, sir.
Yeah, thanks, Vikram. Hello and welcome you all to CreditAccess Grameen's Q4FY20 earnings call hosted by ICICI Securities. Today with us, we have CreditAccess Grameen's senior management team represented by MD and CEO Mr. Uday, Executive Director and CFO Mr. Diwakar, Investor Relations Head Mr. Nilesh. I will now request MD and CEO Uday Kumar to take us through the Q4FY20 highlights, post which we'll open the floor for Q&A. Over to you, sir.
Thank you, Renish. Good morning to everyone. I thank you for taking your time and joining us today to discuss our full year and fourth quarter of FY20 financial performance. We recorded strong business growth in FY20 with our standalone loan growth portfolio up 38% YoY to rupees 9,896 crores and borrower base up by 18% YoY to 29.1 lakh, owing to large number of branches opened during the year. This was further augmented by Madura acquisition, leading to consolidated loan portfolio growth of 67.6% YoY to 11,996 crores and 64% YoY growth in the borrower base to 40.1 lakh. Our consolidated branch network now stands at 1,393 branches, which includes 923 Grameen branches and 464 MMFL branches. We have now achieved greater diversification and deeper presence in our end markets. The share of Karnataka has further reduced from 34% to 21% in terms of branch network, 46% to 31% in terms of borrowers, and 53% to 40% in terms of loan portfolio. Together, we are now present in 248 districts compared to 157 districts in the previous year. Our district level penetration has improved to 5.6 branches per district compared to 4.2 branches per district in the previous year. Today, around 97% of our districts have less than 2% exposure compared to 94% in the previous year. On a combined basis, there is no single district having more than 4% exposure. Further, our share of rural borrower has further improved to 82%, from 83% to 86%. Our leadership position as the largest microfinance company has further been consolidated along with Madura, with strong presence in mature markets of Karnataka, Maharashtra, and Tamil Nadu. We have, in the course of the year, have spread our presence pan India with operations in 14 states and 1 union territory. Our expanded branch network, seasoned manpower, experienced management team will help us to drive growth over coming years. Coming to fourth quarter financial performance, the net interest income increased by 26.2% YoY to 286.7 crores. NIM was stable at 12%, cost income ratio was stable at 36.7%, and OPEX to GLP ratio was 4.6%. Pre-provision operating profit, excluding major expenses, increased by 22.6% YoY to rupees 185.7 crores. Credit cost of 140.7 crores in Q4 FY20 included additional provisions of rupees 82.9 crores on account of COVID-19 impact, 21.4 crore on account of impact of external interference in 2 districts in Karnataka and floods in Maharashtra during Q2, and remaining 36.4 crore on account of normal business growth. Overall, PAR 30 marginally increased from 1.60 to 1.5% in Q4. GNPA 60 DPD increased from 0.85 to 1.57 on account of movement from state 2 to state 3. Overall, ECL provisioning was 2.86% compared to 1.61% in Q3. With including the additional COVID provision. Collection efficiency was at 98% for the quarter. For the full year, we recorded PAT of 327.5 crore ROE of 3.6%, ROE of 12.9%. For adjusted PAT excluding Madura merger transaction costs and additional provisions on account of COVID-19 impact would have been 399 crores. Touching briefly on the FY20 standalone performance of Madura Microfinance, loan portfolio was up 13.1% to 2,100 crores. Active borrower base was up by 26% to 12.15 lakh borrowers. Brand network grew up by 30% to 464 and employee base grew up by 37% to 3,672.
आपण ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्ड वर ठेवला आहे. कृपया लाइन पर रहा. आप जिस व्यक्ति से बात कर रहे हैं उन.
Hello, can you start? Brand network grew up by 30% to 464 and employee base grew by 37% to 3672. Net interest income was up by 90.8% to 269 crores. NIM at 11.9%, cost income was at 39.5%, OpEx to GLP of 5.5%, which is highly efficient at the present scale of operations. Credit cost of 6.1 crore during FY20 included reduction provision of 10.2 crore on account of COVID-19, 15 crores on account of Gajra cyclone impact in the year, and 31 crore on account of normal business growth. So Gajra impacted portfolio has now reduced from 326 crore in FY19 to 82 crores in FY20. GNPA was 1.6% backed by overall ECL provisioning of 2.35%. For the full year, Madura recorded PAT of 79.7 crore, ROE of 3.6%, ROE of 21.9%. Adjusted profit, excluding the cost of transaction and additional provision, it would have been 92 crores. On a consolidated basis, since the transaction was completed on 18 March 2020, we could only consolidate MFL portfolio profit from 18 March to 31st March. However, taking a combined view of full year FY20 performance, the pro forma consolidated PAT stands at 407.2 crores. Excluding the merger expenses and additional COVID provision, our pro forma consolidated PAT would have been 490.6 crores, with ROE of 4.2% and ROE of 18.4%. We shall see the benefit of 100% contribution for the full year in FY21, leading to improvement in our overall profitability and return ratios. The FY21 witnessed COVID-19 pandemic affecting India's macroeconomic activities and people across all strata. Since our business touches the lives of people at the bottom of the pyramid, we took all necessary measures to ensure well-being and safety of our employees and our customers, while abiding by all regulatory guidelines. We earmarked 5 crore funds under CSR to support our community to create awareness on COVID-19, support to any impacted families, and support to build immunity with our community. This proactive culture of immunity building is important as COVID is expected to be around us for many more months. During the lockdown period, our employees were continuously in touch with their customers, and after relaxation of branches worked on COVID-19 related support in form of supply of PPE kits, medical kits, and grocery kits to our local police station, municipal ASHA workers, and who have been fighting COVID-19. Our employees also have contributed 53.6 lakh to PM CARES Fund as a token of their solidarity. After staggered relaxation of lockdown and MFIs being allowed to operate as part of eligible activities, we started our operations in the permitted manner by reaching out to our borrowers to explain the moratorium, extension of tenure, accrual of interest, etc., apart from taking feedback on their economic activities. Close to 90% of our borrowers, particularly who are in non-urban geographies, are positive in their outlook and have given a feedback that their economic activity have been going well for last 3-4 weeks and are expected to reach pre-lockdown levels in a short period of time. Except for containment zones and some parts of the red zones, our frontline employees are not able to meet and take feedback from our borrowers. On the date, over 98% of our branches are operational, with over 90% field force is back at work. We have resumed our regular operations in terms of collections and disbursement from today, that is 1st June onwards. While RBI has allowed extension of moratorium by another 3 months, we took feedback from our customers in the past 10 to 15 days and over 70% of them are positive about not opting for further moratorium, and about 20% of them wanted a few more weeks to start the transaction. This leaves close to 10% of our borrowers who might opt for further moratorium. We are predominantly present in rural markets, which have always displayed strong resilience to external disturbances. Majority of our customers are engaged in essential activities, which have been allowed to function during lockdown, and many other activities allowed in stages from 20th April and 4th May 2020. Further, various relief measures were taken by the government to support people at the bottom of the pyramid, which has been good support to our customer base also. Hence, we believe our customers will display faster recovery as regards their business activities and economic transactions. Our near-term focus will be on ensuring healthy liquidity position to support our customers with disbursement to enhance their economic activities. All our lenders have been supportive. We have received moratorium from over 60% of our lenders during first phase of moratorium, and we are now working with our lenders for further moratorium as well as funding lines during second phase of moratorium. We have raised over 2,200 crores during Q4 at a weighted average cost of 9% of interest rate to meet our growth needs. We have drawn about 425 crores in May from various banks at an average interest rate of 8%, and we have another 256 crore sanction lines. Further, we are working with various domestic lenders totaling rupees 1,475 crores and with various foreign lenders totaling rupees 457 crores, which we expect to draw down in June, July, and August. With all our lenders are supporting us, we are confident of raising sufficient funds from domestic and international sources in the coming months to support our field disbursements. With our robust operating model, proven execution capabilities, strong customer relationships, and strong balance sheet with continued support from lenders, we are well positioned to demonstrate faster recovery and get back on our growth trajectory. With this overview, I would now like to open the forum for question and answers. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star followed by 1 on your touchtone phone now. We have a first question from the line of Shripal Doshi from Equirus Securities. Please go ahead.
Good morning, sir, and thank you for giving me this opportunity. So my question is with regards to our collection efficiency in the month of April and May. Like, I know it would be significantly low, but what would be that number?
So as we explained earlier during our call last time, we have given complete blanket moratorium till 31st May. That means till day first. So our collection will start from today only, because we being a rural focused player, and there is economic lockdown for almost 6 days for many of our customers, we thought it is good to give a complete moratorium to them. So we have not collected during April and May.
Okay. So sir, and what will be our strategy for the second round of the extension of moratorium then? Like, will it be same in nature as a blanket moratorium, or what will be our strategy then?
No. If you heard me in earlier today when I talked, so we took the feedback of our customers in the last 15-20 days. Over almost 70% of our customers' economic activity is quite good. They wanted to start payments, and about 20% of them may take couple of weeks time more to start, and about 10% of them may wanted moratorium. Looking that as a feedback, we have started collections and disbursement from today. So we expect about 20% of them to start paying. So that is why we are not given a blanket moratorium. Moratorium will be only on the need based and the case to case basis, where real need of customer requirement.
Okay, so thank you. This is the last question. So what has been our experience in explaining customers about this moratorium linked interest cost that they will have to pay? Are we seeing any challenge there? Or have we seen any challenge?
we have during this entire lockdown period, and we have sufficient time to train our employees with examples and FAQs so that they can answer the customer trade questions very effectively. Initially, the first phase of lockdown, the blanket moratorium, that interest recovery will be the first, for example, June month, basically first two installment will be, as you know, we are all collecting weekly collections. So first 2 or 3 installments will be the accrued interest collections, and thereafter their normal EMI as usual, which was earlier, will go on. So customers are aware about it. We have given the reschedule to them. So we don't have any challenge in explaining to customers. So extension of, there will be extension of tenure because of the 2.5 months of delay, 2 months or 2.5 months based on the customers who she was. To that extent, there will be tenure extension to the customers, which has been explained, trained our customers well to explain customers with the ease and convenience.
Okay, sir. Okay. Thank you so much, sir. If I have any questions, I'll come in with you. Thank you.
Thank you, ladies and gentlemen. Yes, in the interest of time and fairness to all participants, please restrict questions to 2 per participant. And kindly use handsets while asking your question. We have next question from the line of Nidhesh from Investec Capital. Please go ahead.
Thanks for the opportunity, sir. On slide number 23, where we have shown our ALM position, we have assumed a loan recovery of 745 crores for the month of June. And it also includes a decent interest accrued. So, are you expecting entire interest accrued in one go from the customers? Or
Yeah. What we have worked in Nidhesh is to accrued interest to recover first, so that we will not capitalize the interest and charge interest on interest. We want to avoid that kind of situation. And from accounting point also to it's on a realization basis, so that we are in a safer side of the accounting also. That is why we have position to recover accrued interest first and the installment thereafter. Maybe on the total collection point, it is actual recovery proposed for the month, and we assume that about 70-75% will start payment. Maybe some delay will be there, but actual we have to see later.
Okay. But from a customer perspective,
why we position interest because in a normal static liquidity, only the balance sheet item has to come. Here, it is actually capitalized portion of the interest rate, so we added that as a value.
Yeah. And because from a customer perspective, the EMI will remain same. It's just from an internal accounting.
Yeah.
Okay.
Yes, you are right. And it will be easy for clients also, for employees also. So, it's an accounting point also. That is why we use that methodology.
Sure. And this second question, sir, on slide number 6, when we are accounting for the business combination, we have added a fair value of customer relationship of around 163 crores. What is this, sir, exactly?
Yeah. Basically, we need to ensure that the intangibles are also assets. While we calculate the goodwill from a perspective of what is the residual nature of what is intangibles, we need to essentially break up this particular intangible assets in terms of what we are acquiring. So when we do the fair valuation to estimate the overall value of the assets, we need to obviously be in a position to ascertain which portion of this goodwill will go towards what area. Therefore, we had to obviously assign it to certain intangibles. And the biggest benefit of our entire Madura transaction has been the fair value of customer relationship. So that is the key component for us. And that's a strategic benefit that's available to us on account of the acquisition, and which is the significant portion of the goodwill that has come through. And that's been clearly explained in the slide 6, as you can see. The idea here is that the customers' relationship with Madura, what they have accrued over a period of years, that is something that we will be getting consequent to the transaction, which will accrue significant benefits on account of retention, and also the fact that microfinance being a customer-centric business where we keep giving repeat loans year on year to the good customers. And this actually forms a significant strategic benefit of the transaction.
Sure. And just lastly, from capital standpoint, our Tier 1 ratio has reduced because of the merger. So do you see need for capital raise in this financial year because our Tier 1 is now coming down to 24%?
Yeah. As you know, we have a policy of not to fall our capital adequacy below 20%, but we still have a headroom for this next 3-4 quarters. We will see the position, what is the best time to go to the market if required this financial year. But anyway, after 2 quarters, we will reassess the requirement.
Sure, sir. That's it from my side, sir. Thank you.
Thank you, ladies and gentlemen.
Thank you.
Kindly restrict questions to 2 per participant. If you still have more questions, kindly join the queue afresh. We have next question from the line of Antariksha Banerjee from ICICI Prudential AMC. Please go ahead.
Yeah, good morning, sir. Can you hear me?
Yeah, definitely.
Yeah. So 2 questions from me. So in the last call, you had told us that post collection resumption, which is happening now, you would be open to assigning some top-up loans to select customers. So any idea of the 70% customers who are willing to not take the second moratorium, how many would be given this top-up loan? That is number 1. And the second is, I just wanted your view on the entire migrant workers situation. So in your core geographies or your customer base, what is the migrant worker situation like? Are people coming in? Are people going out to other places of the country? Is that a significant distortion in your customer base? And what are your views around it?
Yeah. Sorry, I couldn't completely get your question. I think your question is whether you are going to start disbursements. Yes, we are going to start disbursement to the customers who are prompt in payment. Our estimate is that based on the feedback so far, close to 70% of them would want to start repayment and start drawing money based on the economic needs. We have planned sufficient funding to our customers because it's important to enhance the economic activity. Wherever there's a need and based on case categories, we would start disbursing. I think the other part of your question was basically about the movement of people. There is no restriction of movement of people between districts or between villages, but there are some restrictions in some districts because of the high COVID cases, particularly in Maharashtra and some part of Madhya Pradesh and Tamil Nadu. So we may not be able to operate immediately in those containment zones at this point of time. So that is why there will be a challenge about 10 to 12% of customers except in the initial period, maybe a month of time. So we may have to extend moratorium to them by chance at this point of time. But we will review it because today we have started operation. Maybe next 1 to 2 weeks time we will get a fair idea of where we will be. If I missed something, please tell me because I was not able to exactly get your question. It was not very clear.
Okay, sir. So I'll just repeat the first one. The first question I was actually asking, you had told us in the last call that you are willing to give some top-up loans, small ticket size, for your customers who are good in credit and who might need some hand-holding for the next, say, 2-3 months. I was just asking that product, have you assessed how many customers should be willing to take it?
Yeah. Actually, if you see, we have always a multi-product company. We always provide the money based on need. The income generation loan, the additional loan for generation, the consumption loans, the home loans or home income. There are many products available. Here, there is additional income generating loan at a smaller value. It's always available to them after 6 months of their first borrowing. So we have relaxed a bit at this point of time as a flexibility about 10 to 15,000 wherever there's a need to the customer, we will support them.
Okay. And that will be available to every customer who is coming out of moratorium?
Yeah, depends on. It's available to everybody, but while giving, we will definitely evaluating the need actually. One is they have to be prompt repayers, the credit history must be good. 2, the requirement need to be assessed by the senior people there.
Sure. And the second, actually, what you told me about the containment zone and the stuff, I was actually asking about the entire migrant worker problem. Is it an issue in your geography or in your customer base?
Sorry, sir. I think no, it is not an issue because in our mature market area, we don't have a migrant movement issues. 1. Two, we are not in urban. That is not the bigger issue because our urban exposure is quite limited. As you see, it's only 10 to 12%. And the third one is we never lend to a borrower who have at least 2 years of stay or a house and the residential proof. Without that, we don't lend at all.
Okay. But people coming into the rural areas who might be your customer base from other urban places, that is also not a problem?
No, it won't affect us because it's slightly more in the northern part of the country where our penetration is very low. Actually, we just started operation last year there.
Okay. Sure. Okay. Thank you. That's all.
Thank you. We have next question from the line of Pranav Gupta from Aditya Birla Sun Life Insurance. Please go ahead.
Hello.
Yes, please go ahead, sir.
Hello, Pranav.
Yes, sir. Good morning, and thank you for the opportunity. So 2 questions. So firstly, now that, the lockdown is lifted in most parts and, things are, picking up, how do you see the entire center meeting concept evolving? Because, currently, obviously, conducting the meeting will not be possible. And, conducting the center meeting is a big part of how collections are done by MFIs. So how do you see this evolving over a period of time? How this will change?
Yeah, I agree with you that the social distancing factor is very important to maintain when you do the center meetings. So we have an opportunity because we are a weekly weekly meeting company. So what we plan to meet on one-fourth of the members every week so that we will not have more than 5 people in a center meeting. But in the meantime, in a month's time, we are actually meeting everybody. This is an opportunity because we are a weekly player.
So basically what you're saying is that instead of meeting the customer 4 times, you will just split the group into 4 and meet them once a month. Is that fair? Yeah, understand.
Basically, actually, let us assume that there are 10, 20 members in a group in a center.
Right.
5 of them will meet in each week and they represent everybody. So that eventually a month we will be actually touching everybody.
Okay. And just in connection with this only,
very good representation for us. If 5 of us represent everybody and the pays for them, and each week we will have access to everybody. So with the process, because of this concept of weekly meeting, we are ability to meet everybody and connect with them is a high opportunity.
Right. I understand. Just in connection with this, sir, have we faced, in the geographies that we have tried to collect from, say, mid-May, or actually not even collect, but just go and meet the customer, have you faced any issues in terms of, the localites or local organizations not allowing our field officers to enter or some sort of disruptions in that sense?
No, actually we have not faced any issues. First of all, because we have not gone and asked for any payments because we are very clear that moratorium was available till 31st May. It was announced upfront to all customers by call as well as by communication through audio message also. So our customers are very clear. Even if we go there, our employees have gone there, met them, took the feedback, but they know very well that our employees have not come there to collect money. So we did not face any problem anywhere in the country.
All right. So, and just the second question.
I'm sorry to interrupt. Would you like to come back in the queue?
There's some problem in the line also.
Can you?
Sure, sir. Kindly come back in the queue. Thank you very much. We have next question from the line of Akshay Ashok from Dalal & Broacha. Please go ahead.
Yeah, hi sir. Congratulations on strong set of results. I just had 2 questions, sir. I didn't get your point on your borrowings, whether your lenders have offered you moratorium, how is that going forward? That is one. And the GNPA increase, is this only because of that problems in coastal Karnataka? Is it why it has risen to 1.57% this quarter? So these are my only 2 questions.
Yeah. Okay. I'll tell you. First is moratorium. What I told you is over 60% of the lenders have extended moratorium. I think that is clear. and we are expecting the typical support from the borrowers, from the lenders going forward because of moratorium 2.0 yet to implement. We have reached out to all the bankers. We will eventually get the answers from them. In case of GNPA increase, basically is from a stage 2 to stage 3. That means less than 60 days, move to more than 60 days, as the DPD 30 remains the same. So that is what I was telling. There is no movement of delinquency. For example, DPD 30 days was 1.61% as of December, is 1.7 now. Whereas GNPA 0.85% moved to 1.4. Basically, is the movement of stage 2 to stage 3 within the same bucket. The bucket moved from less than 60 days to more than 60 days. So we decide DPD at a 60 days. That is why it comes as a GNPA. Whereas since they were already in stage 2, we have already provided sufficiently in December. Actual provision made by us for that is only 20 crores in this quarter.
Correct. Okay. Yeah, sir, but till February end, the RBI told that your loans can continue to remain standard, right?
Correct. No. Whatever the stages as of 29th February, that remains same thereafter. Because if it is standard, remains standard. If it is 30 days, remains 30 days only till the moratorium completes.
Moratorium. And this consolidated numbers you have given, it's only Madura's number is only profit numbers are only from March 18 to 30th. Is it? Why is it so? COVID reasons.
Exactly. Only for 12 days because from the acquiry date only.
So in 21, you will put the numbers, the entire Madura numbers together in FY21?
Yeah. You can see too, there is one pro forma slide is there, which actually shows you combined for both the companies. 79 crores and totally 407 crores. You can see that. Going forward, we will get the full year benefit. Yeah, slide 7, you can get the pro forma. Had it been full year, what will be the numbers? So going for, but the statutory numbers are basically for 18 days, sorry, 12 days only, because the acquired date.
The consolidated numbers is for 18 days. Okay.
Correct. Slide 7, you will get the pro forma of both company together.
Okay, sir. Thank you so much. Thanks.
Okay.
Thank you, sir. We have next question from the line of Karthik Chalappa from Buena Vista Fund Management. Please go ahead.
Yeah, thank you very much for the opportunity, sir. 2 questions from my side. Firstly, the 10% of the customers who have opted for the full moratorium, who are mostly urban, what kind of economic activity are they engaged in? Is there any common thread?
Okay, you said 2 questions.
Okay. The second question is, Madura is supposedly 96% rural, but when I see the presentation, there is not even the proportion in the green zone is close to 0%. Most of it is orange and in the red zone. What would explain that?
Okay, I'll tell you. First is 10% may opt for moratorium. That is what we said, because they said they may have still difficulty. Possibly one is basically the urban and possibly the more of a containment zone where the economic activity still not fully started for them. That is one. Activity majority in urban are the small shops, eatery shops, roadside vendors. So many of them activity not fully started. So that could be the one of the reasons that they want more time. There's our assumption that they may opt for moratorium. Right now we have to check with them, but the feedback shows us that they might. That is our assumption. Because of the urban nature of the impact, and that is what the reason. Because their activity not started on April 20 or May 4th or even May 18th. Some of their activity we have to start and not at a full-fledged because of the more containment and more red zones around them. That is what the reason the activities are less. That is the first point. MMFL is predominantly in Tamil Nadu, and major districts in Tamil Nadu are more than 100 COVID cases where we treat them as a kind of red zones in our database. That is why you could see that orange or red. So 70% of Madura book is in Tamil Nadu, and another 10-12% is in Maharashtra. Both Majority of the districts are having wherever more than 100 cases, we treat it that as a red or orange zone. That is why it shows that. Otherwise, the portfolio is in village, but not necessarily entire district we covered as orange, it shows as a higher percentage traffic. But overall, it becomes 86% between Madura and CAGN together.
Perfect. So when you said your comments, just one follow-up. When you said your comment collections today, is it happening at the center meeting, or are you asking the borrower or the field officers going to the borrower's houses individually, or the borrowers coming to your house?
Our collections only happens in center meeting. Center meetings will started from today with the minimum 1/4 of the center size will be participating. But they will represent everybody and the entire collection they will pay.
Okay, this is very clear. Thank you very much, sir, and wish you and the team all the very best. I'll come back in the queue for more questions. Thank you.
Thank you. Thank you.
Reminder to participants to ask a question, please press star one. We have next question from the line of Apurv Trivedi from Moon Capital. Please go ahead. Yes. Mr. Apurv Trivedi, please.
Hello.
So we can hear you now.
Can you hear me?
Go ahead. Yes.
Yeah.
I can hear you.
You mentioned earlier that 60% of the lenders have given you moratorium. Could you just help me understand what the remaining 40%, what is the status, what is their expectation?
Actually, about 60-65% have given the moratorium. Balance actually we paid it. We paid during the month. Because interest anyway we pay to everybody. We always committed that we will pay the interest. And we paid the installment to them where they are not agreed for a moratorium.
Okay. And it seems like, with the additional challenges in the mutual fund industry and, some of the other issues, your dependence on banks for funding is increasing. How do you kind of see that shaping out over the next 2 to 3 years? Are you comfortable with that increased dependence after this experience? Or do you think you would kind of, need to diversify funding somehow once things normalize?
So, I'd say two things. We have never exposed to mutual fund or capital markets or NBFCs actually, which was not our borrowing side so far. Hardly about 2% of our borrowing is from NBFC. Otherwise, no capital market, no mutual fund. And dependency of bank is about almost 50% so far. Only in the Q4 it was little high because we drew a large fund from SBA. That is why it will gone up. Otherwise, the strategy is to accrue as much funding from international sources, which is working. We are working on that going forward to diversify and the long-term funding, which plan is going on. We are expecting that to happen more. We would eventually reduce the dependency on banks below 50%.
All right. Thank you. I'll get back.
Diwakar want to add a couple of lines here because Diwakar is working with the parent side Amsterdam office on international borrowing. Diwakar.
Our strategy remains the same in terms of our ability to diversify our funding sources. Our dependence on one source has never been there, and we also never relied on capital markets and also the mutual funds. So while this has been the stated strategy, and we have stuck to the strategy with more emphasis on increasing our international exposures and borrowing from those sources, thanks to our parents, and that continues. So as far as we are concerned, in all the situations, including COVID, funding is something that we are constantly getting from our known existing relationships with domestic banks, FIs, and also the other sources from abroad. So there are no challenges that we foresee in terms of our ability to garner funds to continue our normal growth.
Thank you.
Thank you. So we have next question from the line of Sandeep Agarwal from Naredi Investments. Please go ahead.
Hello.
Hello, Sandeep.
Yeah. So my question is just, so as per your long-term experience in microfinance industry, what is your view regarding recovery of microfinance industry in next 3 to 4 months, and how things will pan out in next near future?
See, microfinance industry has been very resilient if you compare to any previous such kind of debacles, whether it is 2010-11 crisis of Andhra, or it's a case of demonetization, or the flood, or drought, or elections. Many things we actually keep talking about it, but every time the resiliency of the bottom of pyramid is much different than what we think. They will come back very fast, and because the microfinance is bread and butter for them. So that is why we always saw the resiliency in the way they're coming back. The history is available for us to see so far. Even here, if you go back and see, just to compare the demonetization, where people did not have sufficient funds, or the funds what they have is not valid and not working, and economic activity was down, still they all come back and started paying after 2-3 months. Without any moratorium, without any additional support from government, whether in terms of food security or a trade to general or a moratorium, but everybody come back and paid, and the industry lost some money, but only in some pockets, not everywhere. Here, they are completely different. In the demonetization case, while industry lost a bit, but Grameen didn't lose. They lose hardly just 3.9% of the total portfolio. And then people have come back. Here you see the difference. The customers have not lost their assets. They lost economic activity for maybe 60 days, but they got food support. They got some support from credit from general account. They also got moratorium. There's no outflow to them. And from May first week, by and large, all activities are on, whereas essential activities are continuing even during lockdown, where for example, the micro customers are majority in rural activities and essential activities. So their activity is continuing. So that is why I see there is a huge potential that this situation, this guy's resilience is much more stronger than what we see in urban and what we see in the bigger industry or bigger MSMEs or SMEs. Their activities are small, their payment is small, their borrowing is small, and this is microfinance is for them with bread and butter. That is why we believe that the turnaround of this segment will be much faster in the next 2-3 months. Yes, there is COVID. COVID will be there for next 3-4 months. We have to watch this space. There will be some containments here and there. There's some red zones here and there. To that extent, we have to be careful about it. Other than that, in the normal places where there is no COVID super impact or containment or red zone, everything should be normal in 2-3 months' time. That is what our belief. Whereas CreditAccess Grameen specifically rural focused, majority of the customers are in essential activities, and they have shown resiliency again and again, and we have experience with our management strength, our employees' strength who have been experienced, and our product and process, the way we handle the customer centricity, which should help us much better in this situation.
Okay. Thank you, sir.
Thank you. We have next question from the line of Nikhil Valecha from Sundaram Mutual Fund. Please go ahead.
Yeah, hi, sir. Sir, in slide number 23, where you have given breakup of the loan in total inflow and outflow, I just wanted to understand, in the June where you have assumed 750 crore of recovery, what are the underlying assumptions? Like, what is the collection efficiency and the amount of EMI that you are collecting in your estimates?
Nikhil, this is a static utility which actually basically comes from the balance sheet. What is the due for recovery in the month of June? It's 144 crore. In that, about 466 crore is basically interest accrued during the moratorium, and there is a total 744. In a static liquidity, we have to present the actual recoverable for that month. So that is what the data. We expect, as I told already, at least 70% of our customers are willing to pay or don't want moratorium, at least the feedback what we got from last 10-15 days. So our estimation is the recovery will be more than 70%.
So if I assume 70% collection, then that would mean each customer, like based on a total customer base, each customer would have to pay 2,500 EMI, which is higher than the normal. So how will they pay, given that you also said that many of the customers required additional support?
No, I'm not.
So in your estimate, what is the EMI collections that you are expecting in June?
My 70% of customers pays less than 500 rupees per week. Means maybe 2,000 rupees in a month.
Thank you, sir.
Small loans, right?
Yes. We have next question from the line of Pranav Gupta from Aditya Birla Sun Life Insurance. Please go ahead. Mr. Gupta, please go ahead and ask your question.
Yeah. So just wanted to understand one last thing. So you said that about 60% of your customers, of your banks, give you a moratorium. What are the discussions with the remaining 40%, whether, they are willing to give moratorium or, whether they have demanded the payment? What is the scenario there? Just want to understand that.
See, this is what I told you on the moratorium 1.0, the release which ends on 31st May, when it was announced on 27th March. And this is already passed. 65% we got it, about 35% they did not give, we paid to them. Now for the second, the moratorium 2.0 will start from today. We already approached the banker. We expect the similar support from the bank, what they have given in the first part of moratorium. We expect that only. We are in a conversation with them. We expect that to happen.
Okay. Great, sir. Thank you.
Okay.
Thank you. So we have next question from the line of Rohan from Multi-Act. Please go ahead.
Hello. Yeah. So thanks for the.
Hi, Rohan.
Hello. Sir, you said that weekly meetings will start from today, but only 1/4 of the borrowers in a group will attend the meeting. So now say there are 20 borrowers in a group, 5 will come for the weekly meeting every week. Will these 5 borrowers represent the balance 15 and will have to collect the dues from those and give it to our collection officer? How will this revised format work, sir? Can you please elaborate?
No. Rohan, actually, we have a process of collecting in a group basis, not individual basis. So when 1/4 of them come, actually they will actually collect themselves from the entire center and pay. This is a process we follow earlier also, not currently. Even earlier also, it's only a group representative. A center will form a group of 3 or 4. Each group represented by one person. They will collect the group and pay. Normally, we don't collect individually. It's always paid on a group basis. 2 to 3 people give for the entire group. This is the process we follow even before. It is nothing new. So we don't have any challenge of going and collecting individually. We never collect individually. We always collect in a group basis.
Okay. No, sir, my question was that there are 20 people in a group. Pre-COVID, how many people used to attend the group meeting out of this 20? And from today, how many will attend?
Okay.
Yeah.
Oh, sorry. Yes. Earlier, we have about 85% attendance, Rohan. Okay. Now, we ourselves have told them not everybody to come, only 1/4 of them to come along with center leader, so that we will be able to maintain the distancing and manage the center well without any disturbances of the COVID issues. So we ourselves informed that they should come in a smaller group representing everybody. The center can choose who to come in each week. That way we work.
Okay. But from all borrowers, EMI will be due and collected weekly, whether they attend it weekly.
Yes, exactly. That is based on the choice. About 55% of our borrower pays weekly. About 38% borrower pays fortnightly. About 8% borrower pays on a monthly. So the every week, what is due in that week will come.
Got it, sir. Thank you.
Yes. Got it. Okay.
Thank you, sir. We have next question from the line of Nitesh from Investec Capital. Please go ahead.
Sir, on the Madura, what is the moratorium expectation, the 70-20-10 number that we have saying for the CreditAccess? What are the similar numbers for Madura?
It should be by and large same. It may be little higher actually there, because even in April and May, we are able to collect some money there. We are by and large almost 10% we have collected. Customers not opted for moratorium in the first lockdown also. We expect little higher, but we can say by and large same.
Sure. And the static liquidity that you are showing here, from a lender's perspective, are you expecting any moratorium in June month?
We expect the similar support to what they gave in the first moratorium. 60 to 65% of lenders should be able to give us additional